I'm Charlotte McLeod with investingnews.com, and here today with me is Omar Ayales. He writes the Gold Charts Are Us newsletter. Good to have you here in person for the first time. Thank you for coming.
It's my pleasure. Thank you. Thank you for having me. We're great event, great energy, and a lot of positive people around here.
Yeah, so we're here at the New Orleans Investment Conference, and where I was going to start, you were on the precious metals panel earlier in the show, and unfortunately I arrived that day, so I missed that one. I wondered if you could share any quick takeaways from that, because I'm sure there were a lot of great thoughts on that one.
Absolutely. Well, first, the people who were there, great analysts, and different segments of the gold market. They provide different things from newsletter writers to coin bullion dealers. So you get really like a good perspective for about owning gold. Why would you own gold? How you go about doing that, and what are the best ways. So I think a big takeaway. There was a lot of discussion regarding the difference between gold and Bitcoin, and why the younger generation is preferring Bitcoin over gold, and I think it's important that to note regarding that and what was said in the panel is that definitely Bitcoin is a lot more accessible, and there's a lot more information regarding the around the younger generation, but the sentiment that drives both asset classes is very much the same one, right? It's decentralized. It's the need for something that is not manipulated by a central order or government, and both gold and Bitcoin to a degree offer that. One more popular with the younger generation, one more popular with the older generation. And, but those are coming together in a way that, they'll both, I think, bounce off each other, feed off each other. And, it's a very interesting time, we are in general.
It is a very interesting time. And I also have been hearing a little bit more about Bitcoin at this event. So interesting, as you say, to see them come together. So going over to gold, we'll focus on gold today. We last spoke about a year ago, and you were explaining at the time gold moves in these 7 to 8 year cycles. And if I remember correctly, every 7 to 8 years, it hits a bottom, then it goes into this 11-year uptrend toward a new high.
That's right.
Okay, so by your calculations, you're expecting a peak in 2026, 2027. So are we still on track?
We're still on track. So last year when we talked about this, this part of the very strongest part of this cycle, it was getting started, and we had a great year, and we've been having a great year in 2024. But the strongest part of the cycle, which is the last 2 years, the tail end of it, of this 11-year cycle, from the bottom being 2015, 2016, ends up being around 2026 top. And it's going to be, supposed to be this parabolic stage that, I don't know if you've been talking to some people, everybody's talking this year, we're going to go hyperbolic here. And there's a lot of excitement regarding that. And it's very normal. This is not the first time that we're in this same position with this same setup regarding gold. And I think the setup is that we're heading into that very strong phase where a lot of the retail investors starts owning gold. And you'll start to see also like the junior miners, the actual miners, perform, and that's all part of the same silver itself, breakout, and all that together is a big sign of that gold is moving into this stronger phase. And so everybody who's been in the market, I think has been doing great, and they should stay in the market for a little bit, in the gold, for the next year or so. And those who are not in, it's not too late. It's still, this is going to be the craziest part of the move, and there's a lot to be made from it. So.
Yeah, I think that's important to go into, because one of the questions that I see among our audience is, okay, where actually are we in this cycle? So maybe just to drive that home a little bit more, when we get to that peak, what is the top price, I guess, that you're anticipating for gold?
Well, I'm a chart guy, so so my charts tell me that gold could reach somewhere around 4,000. That would basically be a rise equivalent to the rise that we saw in gold from 2008 or 9 lows. That was, the financial crisis lows to the peak of 2011. The way that I see it, 2022 lows were equivalent to that 2008-9 lows. So, from that low to the peak was, 170% rise back then. And, I think that we're going to see something similar now. And right now, we already advanced some of that. So 50% from this point up, which would put it around $4,000, I think is very, very, very plausible.
Yeah, I think, and with every day, it feels more and more plausible, I think. Okay, so good to go into that. And you mentioned you're looking at the charts, right? So we've got the upside there. What about the downside? Where might people because I think people do still consider the price to be quite high right now. Where might pullbacks be?
Well, so 2,600 I think is a very bullish support area, and we've seen gold holding around that level this past week or so. A deeper support is around 2,200, 2,300. I really don't expect gold to fall there before it actually goes parabolic. I think that we're going to see higher highs, and then I think the risk of not being in the move as it reaches a high is a lot more than the risk to the downside that you could experience at this moment. Now, look, I do think I'm not a perma bull. I do think that once this move is exhausted, and it could be somewhere in 2025, 2026, I think it's very likely we go into a heavy correction or prolonged type of decline, like a couple years. That would be in line with other moves in the past, and so yeah, I think this is a good year to look towards capitalizing. Like at least toward the second half of the year, you should start thinking about it. Not necessarily you got to take everything out of the table, but like when you start getting like those miners where they start like rising a lot, and you start getting this explosive upside, it's easy to get excited and caught in the move. But you also, I think it's a moment of also like capitalizing and realizing some of those gains that we're going to be seeing.
Okay. And I always really like to get the chart perspective, because that's definitely not my area of expertise. But if we look beyond that at the factors driving gold right now, what are the key things that you're looking at?
Well, from a fundamental perspective, there's so much going on in the world, right? I think the number one and most obvious and maybe most boring, but the reality is, the monetization of debt, right, and the inflation in monetary inflation, and the debasement of global currencies, and that in itself is really probably your biggest catalyst for gold. I feel like the inflation story, even though the Fed has believed that inflation has been reined in and under control, I don't think that's necessarily the case. Historically speaking, we're probably more closer to the onset of a major inflationary move longer term. And regardless of who's president, regardless of who's behind this, right? It's just, the amount of money has been printed, the amount of the position where we are after decades, of monetary policy and, a monetary expansion policies, and that it puts us where we are. And really that is going to be very supportive for higher asset valuations down the road.
Yeah, I think it gets pretty tricky to pick apart what's going to happen with inflation and interest rates. So maybe we go a little bit deeper into that. So we do have the Fed, of course, coming down. They're telling us inflation is going to be okay. What's your outlook for inflation and the Fed's response?
Well, the Fed response, I think, is natural. They don't want to wreck, a strong labor market. And, they've been wanting to ease, to kind of like manage, try to manage that situation, which I think it's part of their dual mandate. But, I think that the fact that inflation has not come down to the targets that they've been promoting, like it's a little bit concerning in the sense that lower rates could wake up, again, the inflationary spirits and the animal spirits and stir all of this commotion that eventually could push inflation higher. When you see, for example, interest rates at the different ends, the different durations, the short, 90-day T-bills or 2-year, they're actually falling. Same with the Fed funds rate, is probably going to continue to fund. The Fed is probably going to continue to cut. That in itself is going to create inflation expectations in the future, right? For higher inflation expectations, and that's why longer-term yields are actually on the rise. The longer-term bonds have continued to fall, and we're very likely to see them continue to rise. The long-term yields, because there is an expectation that there's going to be more inflation down the road, even though right now it's kind of been on the decline.
Okay. And you mentioned looking at the election, it didn't matter which candidate won, the debt was going to be this massive problem no matter who we have. But are there any other ways that Trump's victory in the election has changed your outlook?
Well, in general, I think Trump's election is very bullish for the U.S. economy. In general, I think America First agendas and a pro-growth policy, I think that in itself should bring economic strength to the U.S. That in itself could provide supportive strength to the U.S. dollar index. And that in itself could create a lot of different things. We already saw it happen in 2016 to 2020. That we saw a stronger dollar put downside pressure on the Canadian dollar and other global currencies, right? And I think you could end global asset values as well. That could happen. Now, it is likely that either that coincides with that portion of gold that we're going to live probably after that parabolic stage of like maybe consolidation, or that both gold and the dollar continue to move. It doesn't happen very often, but it sometimes has when gold and the dollar actually move together.
Okay, and that's an interesting point that I didn't think before to ask. So we get gold going to this parabolic move. What happens after that? What new level is going to be?
Well, so I think we go gold after that goes into a period of consolidation and decline, and call it a bear market maybe, if you will. I don't wanna dare say something like that. I want because
Not here.
yeah, exactly, no. But it is very likely that we will move into a consolidation phase. Like not everything goes to the moon forever, right? There has to be a return to a medium, and a mean reversion, and that's normal, and that probably could coincide with strength in the U.S. dollar, could coincide with strength in the U.S. economy behind like Trump policies. Usually gold tends to do better with Democrat presidents. Actually, yes, historically.
That, yeah.
Yeah. And I think there's also like some fear factor there, also some uncertainty. There's a lot more usually associated to more reckless spending. So again, I think those are just concepts that drive the valuations.
Okay. So we've covered gold, I think, pretty well. And you were starting to talk about the gold stocks, right? And I think we should go in that direction, because a question that people still seem to have is, when are the gold stocks going to move? And I've heard so many different answers about what's going on. I hear some people saying, well, the good ones are already moving, or it's this factor that is going to make them take off to a further extent. What are your thoughts? What is going on there?
Well, many things, like, and it's great observations. And because, yes, I think the senior miners have been moving already. They've had a great move. Like, a lot of the positions that we've had that are senior, like, have risen 100% in the past, like, maybe say 2 years. Some of them shorter period than that. And but those usually have been the senior miners, the more established companies. And not necessarily like a lot of what you see here that are junior miners, more of the established companies that have low debts, cash flow. They have understood and assimilated the bull market in gold, and they have been able to benefit from it. Those have been doing great. The junior mining stocks, which I think are one of the places you want to be, because that's where you get you can get an alpha, right? You can get an outperformance of everything. Are tricky because since their fundamentals are softer. Obviously, they have more debt levels. They have to raise money all the time. They have to dilute shareholders, etc. It's a little bit harder. But when the retail investor starts coming into the market, and we see gold's most explosive stages throughout history, it tends to coincide with also an explosion to the upside in junior miners and in silver, which are the more speculative aspects of the gold universe. And that is when gold starts going crazy, then these little miners, they're going to outperform everything. Actually, the senior miners already have risen a lot, and I think they have a lot more upside still. But you're going to definitely get probably more of an upside, from the juniors. And yeah, right now the reason I think they've been lagging, okay, to answer that part of your question, is because the retail investor has not been in this market. Really what's been pushing gold up has been central bank buying, for the past several years. And central banks, yeah, they've been putting a dent in the demand side, right? And I think that's what's been pushing gold up. But the average retail investor is really not in this market. I think now that gold goes into this parabolic stage, I think they will. And in the Western retail market, what they do is that they go into the junior miners. That's how they invest in gold, and that's where I'm really hopeful and of a really strong up move in that sector within the sector.
Okay, so we should be in the gold juniors. And when you are looking at them, what process are you using to do your evaluations? Are you using charts at all? Because I imagine when they're so small, they must trade irregularly. Maybe it's harder. What do you do?
Well, yes. So for example, I compare the valuations between the juniors and the seniors. So for example, usually right now, if you see a chart like that, you're going to see that the seniors have been obviously outperforming the juniors, just because that has been the dynamics, right, until now. But you start seeing that there has been a strong floor in that relationship, and you're starting to see the juniors now bouncing back. The past couple months, you're starting to see the juniors starting to wake up, right? And the things that they're waking up from a very low area. So, it's sometimes gut-wrenching to watch the whole process. But, they have been outperforming the seniors, and they haven't broken out against them, but I think they're due, and it's about to happen.
Okay, it's about to happen. That sounds pretty good to me. If we look over to silver, this is another one. So people are waiting for those gold juniors to get on the move, also waiting for silver to follow gold higher. So you've got this cycle that's going on in gold. Does silver have a similar cycle, or what is it doing?
Yes, silver tends to follow gold. And when gold is at its strongest phases, silver tends to outperform gold, similar like with the miners. Actually, silver and the miners tend to actually move together. Silver has had very strong resistance at $30 for a long time, and the recent breakout above that level, the past couple months, I think is very, very bullish for the market. I think the next level that I'm looking at is like around $35. If silver can break above that level, I think it's going to 50 in a heartbeat. And yes, I'm expecting silver definitely to outperform gold. And really, I mean, if you wanna have, you should have a little bit of everything. But definitely don't keep the silver miners out of your portfolio. You should double down on those. I think those are going to be the ones that are probably going to deliver the most. They're the most speculative too. They're the ones you can lose the most also. But with big gains, big risk or big gains, big gains.
Okay, and when it comes to that $35 area for silver, I feel like this comes up a lot in different conversations about silver. We've got to watch that level. When you talk about it going above there and then it can keep going, how long does it have to stay there in that $35 level before we might?
Yeah, you want to see it stay there hold on for at least a week or a couple of weeks. Just because it's such a grand level, grand resistance. Like if it just goes up one day, it could, it happened already, right? It rose, it kind of like broke it, but then it was only maybe a few days. I don't even know if it was a week. And so yeah, I would expect for it to at least break out like at the end of the week, close the week above 35 one day, or 1 week, right? And I think that would be a very strong indication for me, technically, that it could be moving a lot higher. And as long as it really stays above, 2650. I think it's super bullish, and just the closer it gets to that level, buy,
Okay, yeah. I was thinking about that one or several days where it went above this year for just that little bit of time. Okay, and I, of course, have to ask, so we've got your gold price prediction for this cycle. What about silver in this current cycle?
Well, it has a very tough resistance at $50, like historical resistance. That's where it reached in the peak of 1980, 1981. And that's where it reached also in 2011. So I would like to see it reach that level. Could it surpass that level? Absolutely. I think it has everything going for it. If it breaks off that level, I mean, Marianne Aiden, we work together. Thinks it could go easily to 100. I'm a little bit more reserved. I think I wanted to see $50 first. And then we'll talk about what happens after. Yeah.
Okay, that's definitely fair enough. Okay, so just as we are getting to the end here, before we turn the camera on, you're mentioning, we've got gold and silver, precious metals are going, but we might be heading toward a bull market for commodities in general. So can you talk a little bit about that, what you see coming?
Yeah, absolutely. So I think that, tying it a little bit with the earlier comment regarding how Trump's America could shape all of this, I think the First America policy, I think like the pro-growth agenda that he's trying to implement could eventually generate the economic strength that eventually will make the U.S. as a whole, a big buyer of resources and energy. I think that copper, specifically in the industrial metals, are positioned, uniquely to benefit from this up move. There's going to be a growth-related up move. So I think that type of inflation that we can see from that is actually a healthy inflation. Like I think it's going to be inflation based on economic growth and not necessarily based on. Well, it will also probably have a little element of monetary inflation because we're there already. You don't have a choice. But I think that economic growth in the U.S. and elsewhere. I do see governments around the world shaping towards more moderate or right tendencies, and I think that in itself brings together a shrinking of government and a platform for businesses to thrive, and that in itself should be able to push resources. The other thing is very interesting, just technically speaking, from a chartist perspective, after gold's move, copper follows. And, it's just technically something that historically has happened together, so you want to definitely be also on the copper move, like some of, or, I guess industrial metals, but, some of these junior minor coppers, like I think could be like a great way, to speculate on that upside.
Okay, okay. Nobody talks about copper following gold. Okay, I like that. I'll remember that.
After
Yeah,
the bull
after.
market in copper comes after the gold's bull market for sure.
Okay. Good to know. So that's really good to go into. Before I let you go, any final thoughts you would leave investors with for 2025?
Well, I mean, definitely, don't be out of this move. I think like it would be a mistake. People will definitely regret if you're not in this market in gold, silver. You don't have to be, your head under the water, but like at least you want to have some. I think this type of move and where we're positioned, where we are in the bigger cycle. I think it's unique. It happens only a handful of times in history and in our lifetimes. So I mean, definitely like take advantage of that. Don't stay out of the market. Don't be afraid of pullbacks. We're gonna go higher, and the biggest risk really is not to be inside, not to be in the trade.
Okay, I like that. We'll leave it there for now, but thank you so much for coming back to go over gold, silver, commodities. It was really good. Thank you.
Thank you. It was a pleasure.
Okay, and once again, I'm Charlotte McLeod with investingnews.com, and this is Omar Ayales.